If you're starting to pencil out some marketing strategies when it comes to new crop corn, Michelle Rook has some advice from Bryan Doherty of Total Farm Marketing in Markets Now.
Welcome to Market Analysis. Bryan Doherty with Total Farm Marketing is joining us. And Bryan, we've had a pretty good pullback in new crop corn, and let's talk about new crop corn marketing strategies for producers.
Well, sure, and it's really hard to get really aggressive when the market is moving down, but kind of keep in mind big picture perspective. And in one scenario, we continue to see what we've seen. That is downtrending prices. We see 92 million acres of corn. We see demand remain sluggish and users buying only as needed. So that means ultimately more downside protection is needed. Looking for downside of December corn, likely under $5, and maybe a bottom between $4.50 and $5. And those numbers aren't pulled out of the sky. That's just looking back the last 10 years. And from our fall high or post-harvest high, if we take 637 December corn, we've lost 25% every one of the last 10 years. That puts corn about 478. So we look at buying a put or buying a put and selling a call. I wouldn't necessarily jump into cash sales at this point in the year, but that's how I would defend new crop prices.
All right, what about if you're an end user? Should you be buying at these levels?
You know, end users have been waiting a long time for pullbacks, and all of a sudden they've got a big pullback here. Corn's dropped about 70 cents in the last 2 weeks. In fact, weekly closes here down around 30 cents on both old and new crop corn. Now is the time not to fall asleep and get comfortable with this. We've got all this uncertainty with the year ahead producing, and if the last 2 years have taught us anything, any type of weather scare quickly brings a lot of money back into the marketplace. And so what I would look at if I'm an end user is I would look at ways to either procure the actual supply or cover it with call options if I can't get out and buy it. But get your call options bought when the market is weak. They're fixed risk. They cover the top side. You've got the best of both worlds. You leave your downside open for buying cheaper. You've got the top side covered.
Sounds good. A great advice. Thanks so much for joining us, Bryan Doherty with Total Farm Marketing. More Ag Day coming up.
To discuss marketing strategies, call 800-334-9779.